Strategic questions having to do with, should you be in China at all, and if so, how should you be in China? And I think Warren, touched on some of that, some of these structural questions about, owning an equity position in your competitor as opposed to trying to go head to head with a local player that may have advantages that you will not and never will have. So I think that's actually a key point right there. Fundamentally, most of our members, why are they in China? It's very much, not about manufacturing anymore. We still do have some manufacturing companies in our membership, but it's very much what we call, for the bumper sticker phrase, sort of in China for China, is meaning producing goods and services within the China market for the China market, and that really extends into, having fundamental R&D and product development within this market that's intended to serve the market. And that's very much reflects the majority of our members, how they're structured. And to speak to a point that came up, in terms of, I guess everybody's talking about this whole decoupling thing, and the president also often mentions, wanting to bring American companies back from China. And I think it was Harry that mentioned, that's not happening. Our latest survey came up. We asked directly, of our members, are you planning to leave the China market? 92% said we have absolutely no plan to do that. And really, the remaining is there's some SMEs that are certainly going to pull out of this market, or not necessarily by choice, but because of the COVID situation, meaning they didn't have the balance sheet to sustain. So you're seeing some churn in there, and you're seeing some churn on the supply chain side, meaning restructuring, and I think it was Harry or Warren that mentioned sort of the China Plus One strategy. We've definitely seen that on the supply chain side. So the whole sort of made in China for re-export is very much an old model. Having said that, Apple is probably the most public contrary to that trend. They do manufacturing in China for re-export. Right? Most of the iPhones are made here. But we want to be clear, what's the reason for that? I mean, it's not about cheap labor. Manufacturing in 2020, right? It's manufacturing per se is not necessarily about labor at all. But here it's more about the ecosystem itself. When we see electronics companies like Apple, the infrastructure ecosystem over here is just so well developed that a lot of those companies are really in no position to be moving. So when we ask our members, and also we ask what's the view on the China market from the headquarters perspective, the majority of our members say that the headquarters views the China market itself as being not necessarily a presence in the country, but really looking at the China market as indispensable. So that's not going away. The majority of them say it's either the number one growth market globally, or number two or three.
Despite the fact that China acceded to the WTO in 2001, and I was a little bit of part of that process, they are in broad violation of their accession agreement to the WTO. It's a legal agreement, and the legal agreement spells out a number of reforms that China promised to make. They have not done probably the lion's share of them. I don't know how many of you like to read these things, but if you look at the accession agreement and do a checklist about what, as you know, China, what have they done, you'll see that it's been woefully inadequate. Now, that raises the issue, okay, so what should be done? And I think the issue is that many countries are affronted by China's trade practices, and yet their firms, frankly, tell them not to rock the boat, and they don't want to rock the boat because they're making money in China nonetheless. But that is exactly the problem that China has been enjoying, is that there has not been any kind of collective action on the part of other major trading partners to say, listen, we either need to renegotiate your accession to the WTO, or you can leave the WTO. I know that may sound outlandish, but I firmly believe that China should have whatever economy it wants. Absolutely. If they want to have a communist party, I think that's fine. But they can't have their cake and eat it too. They can't get all the benefits of being a WTO member if they're not going to adhere to the agreement. But I think one of the problems that our president has done, frankly, has been to take on China bilaterally and not in a collective action. And I think the Chinese, frankly, love that approach. And we'll see whether in the future we can have a more collective approach with respect to China, because I think that all would win if they acceded to the WTO.
Harry mentioned a little bit about China no longer being a low-cost provider, and that's what I see as the second risk. Now, for several years now, manufacturers in China have faced rising costs, tariffs, and other challenges resulting from the political environment. The pandemic has just accelerated the reassessment of global supply chains. Yeah, I think AmCham and Ker will probably talk to this a bit more, but they recently had a study or a survey that came out saying that U.S. companies are not leaving China, and I agree that there's no reason to abandon the China market. The local market is just simply too attractive. Many companies, however, are considering what is termed a China +1 or +2 strategy of adding or shifting capacity outside of China, and in many cases closer to their customers. Interestingly, Chinese companies are also affected by these same factors, and they too are assessing the value of expanding beyond China. And while I agree that many of them are moving to Southeast Asia and the ASEAN countries, they are also looking at opportunities in the US. And once the pandemic is resolved and travel bans lifted and life is back to normal, I expect that many Chinese companies will look to invest in the US. With the caveat, if they're allowed to do so, or if they're in an industry that would allow them to operate here. And that's for two reasons. One is to be closer to their customers, and second is to diversify their holdings. Now, messaging at the federal level seems to be that Chinese investors are not warmly welcomed in the US. However, state and local governments are usually very welcoming to any investment that creates jobs. And in the current environment, we're seeing less competition for state and local incentives that are used to attract foreign investment. Some of the options for responding to potential Chinese investment in the US, one would be to let it happen, and the US company would leverage their embedded presence here and their advanced technology to keep the competition at bay. I would just warn, though, that China is committed to leading what they call the fourth industrial revolution of disruptive technological innovation. And they're very investing heavily in, from a government perspective, in artificial intelligence, big data, biotech, and it's their intention and plan that they would be able to catch up and even pass what the US has done. Another alternative would be to collaborate and to cooperate with a Chinese investor that was interested in the US market. And perhaps a company here could help them access the US market in exchange for help to access the China market for the US company. And the third alternative would be sell your business at an attractive price. If they're interested in acquiring a business, and if the price is right, you can sell. But I would also keep the door open to buying the company back if the price became attractive, if the Chinese company was unable to properly manage it here. For those of you who sit on an audit committee, a fair question to your auditor is, given the current environment, how as an auditor are you responding to the challenges of auditing in China? And that's a great question to ask your auditor, and as an auditor, we're receiving that question not only from our clients, but also from our regulators, because it is an issue for them as well.